even though I was anticipating it going into that 4 hour high area that I was talking about. I should have at least been in a little bit,
Yeah, on
and I didn't.
Thursday
So that's just
when we
something
had the
I'm gonna work on.
CPI.
Yeah, yep.
Yeah, the
So
one
I was
thing.
yeah, go
Now
ahead.
you go, bro. You can go.
Oh, I was saying like, so I thought about like why didn't you go into that 4 hour liquidity, and what I realized is most likely they're saving that. They're going to discount lower or price it lower, I mean, and accumulate longs. Then they'll go hit that liquidity pool and exit. So it kind of
Yeah,
makes sense as to why they didn't. I always ask why, like why is it
yeah. It's a
doing
why
this?
to everything. If you can
Yep,
figure out why, and if you could like break down why things are happening, it's gonna make everything so much easier. Like one thing I need to get better at is staying on the weekly time frame. Cause did you watch the video I sent yesterday, like with the weekly range?
I don't think I saw that. No.
All right. Well, I sent a video, and I was just here. I'm gonna go over. You can see my screen and everything, right?
Yeah, yep,
All right. So this black line is when the week opens. So this is like Sunday, Sunday. Then it was like this is all like that night. The Monday open right here. All right. So what I like to do is, you know how I always get the 12 a.m. open
the
when I.
midnight. Yep.
It's the same thing with the weekly open, but you go with the weekly open, right?
Okay.
And see how price reacts for these specific areas, right?
Hmm. Yep.
And another thing, you know how I always use the previous day's high and previous day's low. I use fibs from it.
Yes.
I use them as target. The same thing applies on the weekly chart. So over here, this is the week. This is a whole week. This is a whole week. So from last week's high to last week's low, right?
Yep.
Imagine this is just on a daily chart, because at the end of the day, same patterns apply on every time frame. That's why there's no good better time frame than anything else. They all work the same because it's price at the end of the day.
Hmm.
Put time frame aside, put price aside. It's just
All
chart
fractal.
patterns. It's just all chart patterns and fractal. At the end of the day, you're all fractal. So
Yep.
if you pay attention to this, look from this high to this low, pull it over. Look at this.
Yep.
Monday,
One,
Tuesday,
two.
Wednesday, we got the high of the week right up here. So if you know about ICT or anything, the first 3 days of the week are gonna usually make the high or low of the week. So that's
Yep.
always something to be paying attention to. And if you already knew based off of last week that it was bearish, you simply could have just waited and took no trades all week and waited if to come in this specific area. And then look, boom, another confirmation. This is at 15,000.
Yep.
Look how clean this is. We have from the previous week's high, previous week's low fib, right into this 15,000 area, where above the weekly open, and then look what happened from here. Just straight melts off. That's why when like we have news and stuff, I really could care less about the news. I just want to know when the news is so I can anticipate
Yep.
when the volume's gonna come in. Because regardless,
Exactly.
you're telling me this wasn't gonna happen if there wasn't news. That's cap. You get what I'm saying? And then look,
Yeah.
then it's Friday. That trade that we were able to get off on Friday. Oh, I have it all over here. Oh shit, I didn't even have to do all that. Well, well, that's nice. Well, there we go over here. But look, and then from here, Friday, look where it came. Retrace right up here. But if you go to the daily time frame, look at it on the daily time frame, just like this. Remember that how we made that high that I was just talking about over here,
Hmm.
right here. Look where this traded right on into onto the daily time frame.
Okay.
Look, you see what I'm saying? We traded right into this daily order block, and then if you go back to here, that was also right above the 12 a.m. open, not 12 a.m. That open from the week.
For the week.
And then if you also take a step further and you pull that fib from this high up here, the high of the week, to this low here, I guarantee you it's a 38.20% rejection. And I haven't even seen it yet.
No. Yeah.
And it's just like
Boom.
there's a lot of reason. And then you look at where you are in price, you like that. You probably could have tapped into 14,800. That could have been something potentially, but it's just things that happen like this that are too clear. And then if you take screenshots like this and you bring them into the next week, and then you just study it, because you can study when the highs and lows of this pair are made, and when, because think about it, if I do this for about 6 7 weeks, I'm gonna get about 6 to 7 weeks worth of data from all of this weekly ranges. What's going on, bro?
Hey, how you doing, Chief?
Doing good, doing good. Good
Amazing.
morning.
Yes, sir.
But now, like I was saying, and if you get data like this and just always mark down, so I'm gonna show you right now. Matter of fact, I'm gonna show you my screen real quick. Where is it at?
Hey, boss, 1 second. I hope you're recording this screen.
Of course. I got everything recorded.
Thank you.
Nice.
Here, I'm about where is it over here? You guys see the daily range?
Yep, yep.
Okay, so this is all daily ranges of just the pair. And you see on the right side how I have like these things?
Yeah.
So
Yes.
say for example right here. This is the daily range that I have that I was just showing you guys. I have the type of week it was. I have what day made the low of the week, what day made the high of the week. And the reason I do that is because now I have all this data that I could look at and say I want to say, okay, when did Friday, how likely is it for Friday to make the high or low of the week? Then I can just look up Friday and I get all these examples. I'm like, okay, there's not a lot. I could look up Monday. Okay, I could look up Monday. I could do the same exact thing. I'm like, okay, how likely is it for Monday to make the highs and lows of the week? Monday makes the low of the week a lot of the time, as I see. 1, 2, 3, 4 different weeks is made the low of the week on Monday. And look, 1, 2, 3, 3 times is made the high of the week on Friday. And mind you, if I get hundreds on hundreds and hundreds of these, it's only going to get more. And all I got to do is just look at when is it more likely to happen. Because at the end of the day, we're trading based off of probabilities. We're not trading off of what could happen or what's going to happen, what's going to happen. We just could look at what's more likely to happen at the end of the day, if that makes sense. Because it's a probability game at the end of the day. We're not going to be able to be right all the time. We just want to be right majority of the time. And if we're right majority of the time and have at least a 1 to 2, 1 to 3 trades, over time we're going to be in profit. Even if it's not a lot on certain weeks, over time, if you're consistent, you're going to be able to be profitable over time. If that makes sense. That's why I always stress taking screenshots, because I can go in to a random week. I could just say I go to last week. I could go into here. Last week, Friday made the low of the week. Wednesday made the high of the week. And I can also go look at the range that I did last week. And it's good to have this because I can go back at any time now and I don't have to go on the charts and actually go to these days, if you get what I'm saying. And it just makes everything way better. You can study it and it makes everything just way easier to understand because now you have actual data on it. You're not just guessing that it's going to do a certain thing. You know the likelihood of it doing a specific thing.
Boss, I have a question.
Uh-huh.
Do you have plans to automate these data, like put them in a system?
The thing
And
is, I want to, but it's the type of thing where I look at so many different things, it might be kind of hard to automate it. Even though it's probably possible, maybe in the future I would have to hire like a programmer to try and do it, but there's so many different things that I'm looking at like at once that it would be kind of difficult in my opinion to try to automate certain things. But at the end of the day, if for sure I'm gonna automate something at some point, but as of right now I'm just focused on more of bettering myself, because if I could better myself, automation is always going to be around. It's only going to get more better in the future, if anything. But
yes,
at
I was
some
just
point, yeah,
thinking
I'm
of
gonna
recording
definitely.
it in Excel, and you just kind of create different columns and rows, and then you can kind of do counts for different things, like filter it, like Friday high of the week, and just throw in like a count
Mhm.
if
That's really all
nothing
what you can
big
do.
into using
And then
that.
and then when you have data like that and you understand, that's when you can actually make algorithms and stuff, because you just put what is, you set it to what is more likely to happen. You're not doing it because you know that's going to happen. You're setting it a specific way because this is likely to happen because we have a data on it. But
Yeah, your
eh,
probability is your edge.
that's really all it is what is more likely to happen. That's really
eh,
why, like, what you were saying?
sorry about that.
Are you good?
I heard something yesterday. You probably know about this. I've always heard the saying, "Sell in May and go away."
Mm-hmm.
And this guy came up with a chart on S&P and some of the indices, and he said, and I saw it. It was like every time you buy in November and you sell in the May of the next year, you always get out in profit, and it repeats itself every year, and it's been consistent.
Over time, like if you think about it, the market has certain tendencies. So there's certain weeks, certain months that the market just does certain things. That's why a lot of people, they don't like to trade in the summertime. They don't like to trade December because it's known that over time these months don't have a lot of volatility, don't move as much. And then the beginning of the years, we have a lot of drops. Like as you see, Bitcoin, Nas 100, US 30, all these markets have been dropping recently. And a lot of people, they're calling it, thinking it's a crash, but at the same time, this happens a lot of the time. And then I guarantee you, once April, March, and all these spring months come around, that's when the market starts to take off again. Because if you remember back in like 2020, March is when we had that big drop. And then from there, it's been ups ever since, hasn't gone down ever since. And it's just certain months, seasonal tendencies that things happen on a yearly, monthly basis. Like if you ever notice, because at the end of the day, it's all fractal. So a lot of the fundamentals I don't even take into account. I just like to know when they're going to happen, because I already know that the algorithm is set to do specific things. Because if you think about it, if the majority of the market is ran by algorithms, that's the reason why we can repeatedly see patterns over time. It's because it's doing the same things every day. It's not going to look identical, but over time you start to train your eyes to see it more. Because think of it like this. Say you know when you get a new car or something, you get something new, you start to see it way more often now. Like you never seen the car before. You're like, yeah, I'm gonna get it. Now you got it, you see it everywhere. It's because you see it. Because now you're seeing it. It's the same thing with the patterns. At first, it's gonna be hard to see it, but once you see it 1 day, 2 day, 3 day, 4 day, and that's why I stress journaling, because if you see that there is one of these two setups I like to trade, either a London continuation or New York reversal, when you literally see every single day that one or the other is gonna happen, every single day, you're like, damn, this is real. It's literally happening every day. Every single, like when I had, like, it gets you speechless, because like, damn, I literally have over. Okay, I started doing these like daily ranges at September 13th. Since September 13th, there has been one or the other every single day. Every single day. And that's just on one or two pairs. There's thousands of pairs that these setups are happening on every single day. Why? Because it's an algorithm and it's doing specific things that I've learned to look for. You know what I'm saying?
Yeah, you said in your video not to trust you, just to go back, look at it yourself, and make a decision. And I did that, and that's when everything started clicking for me, because I could see it for myself.
That's what I'm saying.
It's crazy. It really is.
Like, I can show you guys one thing, but you're not going to believe it until you see it for yourself. That's why I tell people, like, I could tell you what to look for, but now it's up to you to go see it, because once you see it, you're like, all right, he's not lying about it, because I could physically see it on my chart on a different pair on my own time without him. You get what I'm saying?
Yep.
But that's really what it comes down to. What's going on?
Do your journaling.
My journaling, I use Notion.com. Notion.so.
You put on the Telegram, so if there's maybe affiliation link or something, we can follow you. That.
Yeah, I got you right here.
Thank you.
I like Notion because it's free and you can do a whole bunch of stuff with it. I have my journal on there. I have my daily ranges on there. I have a whole bunch of things. And it's free too, so that's why I like it. And it's nice and clean. You could be creative with it. But now I'm going to get into the actual back testing now. So we're going to go back to Monday. We're just going to look at everything that happened from that week. So what I'm going to do, I'm going to do just like this. We're basically, this is going to be like a nice, going to go over everything that happened. So say this is all Monday's price action. I want to go over everything that happened. So what I'm going to do is I'm going to mark up the previous Friday's previous high. I'm going to mark up previous Friday's previous low. Just like that. And as you can see, neither of them were traded through. So what is that telling us? That it was overall a ranging day. Because when the previous day's candle doesn't, the high doesn't get broken or the low didn't get broken, think of it as just like a candle that's consolidating. So let me just find them. Let me see. Alright, I can't find a candle. I've ripped. There's a lot of candles, but it's basically just meaning it's an inside day. So it ended up ranging. It didn't go any higher or lower than the previous day. So, but there's still things in here that happen that you can bring your eyes to. So I'm gonna get the previous Asian session range. Just like this. Just like that. I'm gonna get the 12 AM open. Just like this. And now that we had, this is like the main outline that I like to have. I like to have the previous day's high, the previous day's low, the Asian session range, and the 12 AM open. When you get this outline, you can start to realize, like, damn, look at how price reacts to these specific areas. Now, remember on that weekly time frame, how I showed you, where is it? On the weekly time frame, how I showed you that price came above that weekly open, Taj? Look how it does the same thing on the lower time frame, but with the 12 AM open. It does very similar things on every single time frame, because why? The market is fractal and it's all moving the same way on different time frames. But now pay attention to where price makes highs and lows of the day. So up here we have the high of the day, and then down here we have the low of the day. Now what I would do is I would look at where price made these highs and lows and what time. So, okay, this high of the day was made at 9:45. So that's New York session. So 9:45, we have the high of the day right up here. So that's already telling me there's a likelihood that if you understand the setups, when New York session is making the high or the low of the day, there's a high chance that price is going to try to overall have a reversal on that today's trend. And even though today, this day right here, was overall inside day, you can see that it overall reversed on the trend. And when I say reversed on the trend, New York session ended up running the liquidity below the Asian session low, below the lows during London session, and just continue going lower after making the high of the day during New York session. Now that we know when the time the high of the day was made, we look at where it was made. So if you look to the left, we have this order block now. So we're just putting things together like, okay, price tapped into an order block at 9:45 in the morning during New York session. If you say another thing, you could possibly pull your fib. The fib's not really that clean, maybe on a different time frame, but I'm not going to put it. Then you look for more, you're like, okay, where are we at in price? Okay, we're at 14,800. Okay, so we're like, okay, price likes to react at 800 levels. That's why I like to use 800 level. I like to use 800, 500s, 200s, and then our 000 levels, because I know based off of data that price likes to respect these levels. So look, we have this high of the day during the New York session at this bearish order block after we cleared the liquidity above this high, and this Asian session high. And then look at how price reacted as soon as it tapped on into it. Look at how it tapped in, how it rejected right away. Started to lose that momentum at 9:45. So now you're anticipating price is either just going to continue to fly up or it's just going to go lower. So now what I would personally do is I would go down. I will look in this area on the lower time frame.
I would also point out the price didn't close above that 50% of that order block.
The order block, yep, that's another thing I always like to do. Always refine it, because there's little things that you can always do to just give you a little bit of insight. Never closed above. And if you would have seen that it closed just like this, below the 50%, that is a great sign that price doesn't want to go any higher. Great sign. This is a kind of a tricky situation because we are near this previous day's high. So in reality, something I would have wanted to see more is, say price cleared the previous day's high with something like this, had a false break, and then started to show willingness to go lower. But not every situation is going to be perfect. As you can see, price came damn near close, didn't clear it, but look at how price reacted from here. Never closed above that 50%, never closed above 14,800, and look at how the wickedest candle tapped right into both of those right before it fell. Came down, broke the lows, and then where's it going to reach for? Ideally, when you're looking for reversal trades, you're going to be looking for it to run the liquidity of the London session low, because until it runs that London session low, there's a chance that it could just be a London continuation still. Because if you understand London continuation move, it's usually when the London session makes the low of the day or the high of the day, and then New York session will try to come have a retracement to continue going higher. So if you look at this example right here, you can see on Monday, you could have potentially got both of these moves, because if you look at it like this, let me get rid of some of these things. If you look at it like this, if you pull that fib from that London session low to the high made during right up here, right over here. Let me see, pull the fib. You see price tapped right into that 62% right here at 9:30. So there was a chance you still could have potentially caught this London continuation move. But then overall, it came up higher. And then you would ideally wanted to see come clear the London session lows or the Asian session low. And once it clears those lows, that is a good sign that prices overall, the New York reversal happened, because it made the high of the day during New York session and then ran the liquidity of everything. So let's just see how it happened. Price started ranging, but pay attention to how every time it retested, look at where it tapped on into. Retraced right back into that 15-minute order block, but never closed. As soon as it tapped into it, it loses momentum right away. Keep watching. Boom. Now it's coming below the 12 a.m. open. We're still keeping our eyes overall on the main target, which is down here at these lows. This is ideally what we want to see. And after we get these lows taken out, at that point, anything else can happen. Because why? We have these lows, and then we also have this big figure level right here, 14,600. So ideally, you would be like, okay, we have liquidity below all these lows. I'm looking for this to overall be a reversal on the trend. Once we get to this area, whatever happens after that, I don't care. I'm going to take it off here. And then we just see what happens. And then look at that. Price ends up reaching for it all. And let's see how it reacts afterwards. Look at that. Goes straight away after that. And if you at least just would have taken away partials or at least broke even at the specific area because you know there's a likelihood that price is going to have a reaction here, then you would have been good. Because regardless, you never know what could happen. At the end of the day, this could have kept going all the way down to here. But it's just the fact that you know based off of just experience and data in the past what is likely to happen. As you see, I didn't know this was going to happen. I mean, maybe I did trade it, but you get what I'm saying though. It's things that are going to happen on a day-to-day basis. And after it cleared all this liquidity, look where it's going. Back into this range, back above that 12 a.m. open. We come right back above, but now we're like, okay, if there's a chance that it's still going to go lower, let's see what we could do. What I would personally do is I like to draw my fibs from highs and lows. So from here to here, if we understand that price overall still bearish, let's just pay attention to see what could happen. Okay, we're in this fib. Let's see how price starts to react in this area. Tapped into it right away, right above this 12 a.m. open. So right as soon as it came right above this 12 a.m. open, tapped into this fib, melted once again. So just looking at these specific things, now you're like, okay, where did this happen? It happened right when it came back above at the 70.50% of that fib. So now you're like, okay, you see multiple examples of it happening. So you're just like, now you data it, it's in your head. It's the same thing with the car analogy. You see it now. Because so the next time you see it, you're like, oh, it happened again. And think about it. If it's going to happen 2 times, it'll happen 4 times. And if it'll happen 4 times, it'll happen 8 times. And it keeps on going. It's the same patterns are going to happen. And then let's see what happens after this. Ran the liquidity once again. Kept going in that overall direction. But like I said, it was just overall bearish day. But even look at how it still reacted in this area. It was still struggling to really keep going lower. But that's just one example. So this was Monday's price action. This was a overall bearish New York continuation. So now we're going to look at Tuesdays now. So let's just let Tuesday do all it's going to do. I'm going to let Tuesday come. And I'm going to just, here, as a matter of fact, I'm going to do this. So I'm going to mark up. Now I'm going to do Monday's previous high, day high. Tuesday, not Tuesday, the previous day's low. Now we're going to be doing the same thing. I'm going to be looking at the same things. I'm going to look for the, I'm going to get the Asian session range. Just like that. Get the Asian session range and get that 12 a.m. open. So I'm going to be looking for very similar patterns now. Okay. Yesterday was bearish. What can I potentially look for? So I'm going to draw my fib from that high to this low down here, because this is the previous side of here. So that's going to be the range I'm overall going to be looking in. So if I'm understanding like, okay, price has a chance of potentially running higher. So where would it run higher for me to potentially short? So if we look here, this 30.20% is in confluence with this Asian session high. We also have this order block over here that price could possibly tap into. And why am I looking at that order block and not saying order block up here? Because this order block has confluence with something else. It's not just a random order block. There's an order block here that has confluence with, say, this fib short. So now there's multiple reasons here. And if I also look at where this is, we also have 14,700, which is a big figure level. So now there's multiple examples of why price should potentially move here. It doesn't mean it will, but it's just an example. So now let's just see what price does. Look at how price reacts after clearing this previous day's low. So now we also take a note of this. When price comes to these previous day's lows, starts showing a weakness, it tends to be a false break. So it came, cleared this low, and automatically started trying to go higher. So what is that showing me? That there's a chance that this could be a potential reversal also. So if it is, where would I ideally be targeting? The highs made during the London session. The Asian session high also hasn't been targeted yet. And then we have this order block up here. So now let's see where price ends up moving. Is reacting at this open once again. But this is at also a big figure level. This is at 14,600 also. Let's see how price reacts. Comes lower. Still failing to go any lower. Boom. Look where it goes. Clears these highs. And look at how it wicks. Wicks immediately. So now after this, you're expecting, okay, price is either going to potentially start to reverse from here and try to go lower because it already cleared the liquidity. So where is it going to go for? Sell side liquidity now. Unless it still wants to go higher. So let's pay attention. Where's it going? Taps into 62%. Look what happens right away. We get a doji. So now say, for example, you're looking at this as a potential short opportunity because you're looking at the time of day It's 11.15, so there's a chance that it could potentially short. So now if you're going off of what you're thinking before, say you take this as a short opportunity. Stop loss above the order block in case it does go higher, above this big figure level in case it does want to tap into it. And if it's overall bearish, target the previous day's low, or at least target this low down here, anticipating that it's going to go lower. Let's see if this ends up working. Taps into a little bit higher, starts losing that momentum. Okay, in this case, it would have been an L, but now you take this as, okay, during these times, a lot of the time, it might not say have that trade that you want. That's why, in this case, I wouldn't have taken this trade just because it's at around 11. But just for the case of example, more than likely, I would have been looking to take this trade down here because this is the window that I'm trading from around 8:30 to around 10:30. That's when the majority of the trade opportunities are going to happen. So now you take that, you're like, okay, this wasn't a good trade opportunity. Looking at what time it was, I would have wanted to be getting in around here. So if you look at this, now you're taking this, oh, let's study this area down here then. Because if I would have gotten to a trade up here, I would have lost. So now we're looking at down here. We see, look at how many times price came below a low and then immediately gone higher. So if you look at it on the bigger scale, right after we came below the previous day's low, started to lose that momentum and price wanted to go higher right away. Then you go to the lower time frame and you're like, okay, damn, even right here, right before the market really pushed, it came and cleared a low. So that's why if anyone ever, I'm just assuming everyone has heard of stop hunts before, right?
Yep.
Yes.
Or the market like targeting your stop loss. At the end of the day, it's true to an extent. What's going on, bro? What's going on, Damien? But at the end of the day, you got to understand, the market isn't targeting your stop loss. The algorithms are meant to target liquidity. And there just happens to be liquidity in these specific areas that a lot of people are putting their same stop loss. Because if you get stop hunted, I guarantee you there's hundreds of thousands of other people that got stop hunted with you also. Because the thing is, you're putting the stop loss in the same places at everyone else. And if you're putting them in the same place at everyone else, the market is going to target them. So as you can see, the market comes down every time before it moves. And the reason it does this is because it's trying to get out all those other people from this trade, right? They're trying to get them out so that they can move it in their direction. And then from here, price went higher. So now you want to take it a step further. You want to go into a lower time frame and you want to look at where you could potentially caught this trade. So let's look all in here. Where could have you potentially got the trade? Right when this trade started to lose that momentum, say you cleared this low, showed a willingness to go higher. What you could have done is say pull this fib from that low to that high. If you don't know which high, it's right here. Hold on, get rid of that. It's a little bit cleaner. So from this low right here, when we cleared that low to this high, price retraced right back into this fib. But pay attention to how the wick came down, but look at where it closed. Once it start closing or breaking this previous day high, this high right here, the candle, this is where you could have been looking to potentially take that trade opportunity. And then from here, where are you targeting? At least the Asian session high or the London highs. Because look at how price reacted as soon as it did. As soon as it rejected, you had a down candle. So what does that tell you? That there was a reaction here. So at some point, maybe in the future, this might not be a down candle. This might not be an up candle that happens next. This could be a potential candle that ends up coming lower. Because what do we know about probabilities? At the end of the day, like I said, we go off of probabilities. If a down candle closed, there's a probability that the next candle will also be a down candle. Same thing with the daily candles. If a daily candle closes bullish, the likelihood of the next day being bullish is going to be more profitable than a bearish candle, because just based off of probabilities. Because if you just look at the example, look at every candle and then look at what happens next. Bullish candle, bullish candle, bullish candle, bullish candle. Okay, if a bullish candle happens, the likelihood of another one's going to happen. Bearish candle, bearish candle. We had a bullish, but it's a doji. Bearish, 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 bearish. And then they happen all at once. It's not like you're going to get bullish, bearish the whole entire time. Bearish, 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 bearish. And you can sometimes examples bullish, 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 bullish. So you just go off of what is more likely to happen. So if you have one bullish candle, the likelihood of another one happening is going to be far more likely. And now, even though this example, price didn't end up falling, you're just using it as, okay, when this happens, it uses it and has reactions here. One day it might go lower, one day it might go higher. But I just know once it gets to these specific areas in my trade, I at least want to make sure I'm safe in the trade, or at least take something off, because I know that there's a chance now that it could come and stop me back out. So even though price ended up going higher, you probably would have missed out on more money or more profit, or say you just made sure your stop loss was in profit or something and then just let it run. So either way, now you're going off of what can likely happen. So you're learning from all these things that are happening. So let's go back to the 15-minute and look at everything, how it keeps reacting. But pay attention, it still reacted at this 14,700 level. So even though the trade didn't play out, look at how it reacted. And like I said, the same thing happens. If it reacted like this once, it can happen like this again, because this is a clean reaction. Same thing, if you get the 50% of this order block here, move it right up here. Never close above the 50%. Lose that momentum multiple times. Close below the big figure level. The only thing was, this is not at a time that I would likely want to see price trade. This is 12 o'clock, so around this time, I usually like to see reversals, but around this time, the trend has already happened. The trend usually happens in London session and New York session. So if London and New York session didn't set the trend, 12 o'clock in the afternoon isn't going to set the trend. It's more than likely just going to continue with the trend. And as you can see, that's what ended up happening. It just continued with the trend. And then from here, it just did what it was going to do. Okay, and as you can see, majority of them is not playing out as nice no more, because if you would have been wanted to get into a nice trade, you would have ideally wanted to get in somewhere in the New York session. That's why I like to trade the New York session. The New York session is the best the best time to trade with these indexes, because that's when the majority of the volume is. And the thing is, if you trade New York session, you can use the London session's price action and the Asian session's price action to benefit you. That's why I like to trade it the most, because you can use all of the data that already happened, and you can use it to formulate what you think is going to happen for the session. And just like that, you had a reversal. And that's overall what happened. So let's go into the next day now. And then as you can see, where did it eventually target? The previous day's high. So after it cleared the previous day's low and had that overall New York reversal, it ended up trading all the way back up to the previous day's high. At what time? Literally right before the market, right before the 12 a.m. open right here. So I'm going to get all this. And now we're going to look at what's going to happen here on Wednesday. So let's just do this. So now we know that yesterday was a bullish day. So what I'm going to do, I'm going to do the same exact thing. I'm going to get the previous day's low from the day before. And I'm going to get the previous day's high. The first thing I notice is the previous day's high has already been taken out. So what is that telling me? Overall, the trend is bullish. We had this reversal. Previous day's high has been targeted already. What could happen? Likelihood now there's going to be a potential London continuation. So what I'm going to do, I'm going to get the Asian session range from right over here. So from 18 all the way to the midnight. Just like this. Make it orange. I'm going to get the 12 a.m. open also. Now look at this area down here. This is where I want you to bring your eyes to. Why? Because look at where price reacted to. Right here we have 14,800, which is a big figure level. Price traded down right into this 14,800 level. At what time? This is London session. So London session traded below the 12 a.m. open into a big figure level. And now let's get the 50% of the Asian range also. Into the 50% of the Asian range. At what time? Early London session. So what does that tell me? That there's already a chance that I know that this could potentially be the low of the day right here. So if I know that this is the low of the day, I know where to have my stop loss. Whatever happens, if I have my stop loss at least below this low, and I know that it's going to be the low of the day, it's going to be safe no matter what. You might not have the best risk reward depending on the trade, but I know that if it's below here, it's going to be safe. So now let's see what happens. What I'm going to do is I'm going to wait for price to potentially start to lose momentum so I can pull my fib from that London low to the New York session high so I can see where price could likely retrace to. So let's see. We're still pushing. Okay, we started making a high. Okay, we're starting to lose that momentum, but we're showing a willingness for price to potentially want to come lower. So now I'm going to pull my fib from that low to this high, the normal fib. So from that London session low to this high. Now I'm anticipating that there's going to be a potential a New York retracement to have that London continuation. So it's not a reversal no more. So let's see how price reacts. Comes down, taps in at 38.20%. So now I know that there's a probability that price could go higher from here. It doesn't mean it will, but there's a likelihood it can go higher from here, because it's either going to react off of this 38.20% or it's going to come to this fib down here. Ideally, this is where I would have been personally wanting to take the trade, all down here, because this is where the majority of the confirmation is. We have the Asian session high. We have our fib long, all our fibs right in the middle. We have that previous day's high, and we have the 12 a.m. open. So it would be nice to just see it come retrace, tap into it to go higher. But since I already traded this, I think it's going to hold this 30.20% and go a little higher for right now. You see it did react, and it did end up moving higher. But then from here, look what happens. It just continued that trend. So now you take this data, you're like, okay, look at what happened. On a very trending day, this day trended, we had little pullbacks. All we did is had pulled our fib from this London low to this high. Saw that it came down to 38.20% at what time? 9:45 in the morning. This is all London session. This is all our New York session right here. All New York session. So that time that I'm looking to trade, this is where the move happened. And there's a reason I'm trading at the time, because I know there's a likelihood of a lot of moves to happen at this time, just based off of data. Then as you can see, price came into it. Let's look at it on the lower time frames. Price came into it and started pushing above right away. And then what you could have potentially done is to say you didn't know it was going to react here, because it could easily come down to this area here. So you just want to be like, okay, I'm not just going to hop in when this is a bearish candle. So say you're not going to just hop in because it's going like this, because at the end of the day, it could easily come lower. So you see, when this happens, you just wait. Simple as that. You just wait. You let it show you that it's going to react. You're like, okay, it's showing a willingness to go higher. Okay, so right here, once you got that break of structure, now the market structure is going back into bullish. So now you're like, okay, now all I have to do is wait for a retracement. And if I don't get a retracement, I just don't take a trade. Simple as that. If it doesn't come to where you want to see price come to, don't take a trade. Because if you're not taking a trade, that's the same thing as winning a trade. Because you're not losing money at the end of the day. And if you're not losing money, that's a successful day in my opinion. So now we wait for price to potentially have a pullback. Now where would I ideally want to see that pullback come back to? Let's get a little bit, I'm going to zoom into it a little bit clearer. So ideally, I would want to see price at least come back to this original order block right here, or come into, say, a fair value gap. And if you don't know what a fair value gap is, it's basically like a gap in between three candles. So say these three up candles right here, the fair value gap will be in between right here, because this is where it left the gap in the market. And when it leaves gaps like this, a lot of the times it tries to come back and fill it. So say now you're anticipating a potential pullback to this area. So say you have a buy limit, or you're just looking to enter here. I did that a little bit reverse. But say you're looking to enter here, because you know that you got that break of structure. You're holding this 38.20% level. It reacted at a certain time, so you have your stop loss below here. And where would you be targeting? Since we already targeted the previous day's high, you would ideally just be targeting a big figure level. So if you look over here, we have 15,000. That would be somewhere you would ideally want to take some of the trade off, because that's a big figure level that could likely have a lot of reaction. So even then, this is still a 1 to 2.3 trade. So now let's see what happens. Look how close it got to. Okay, it's not perfect, but look at that. Because mind you, this isn't going to happen all the time. Look how close it came to it. Look how close it came. I missed it probably. You would have missed this trade potentially by a few pips. But say now if you pulled your fib from this low to this high.
Also, is there anything on the 1 minute? I see you're on the 5. Maybe there's a
The thing is, I would go into lower time frame too, but the thing with like the replay, if I go to 1 minute, it's just fucking up. Trust me, I would have went on there too, because I guarantee there was a fair value gap in there. Yeah. But I would just stick to the 5 right now, because you see how you would have missed it by a few pips. But look at the precision though, because mind you, you might have missed it today, but now that you see this happening, you might not miss it tomorrow or next week or the day after that, because you've seen it happen once. And look at how precise it came into. Trade right into that 38.20%. So where did I draw the fib? I drew the fib from this low to this high. So right after it cleared this high, we got that market structure break. So now we're no longer in that bearish market structure. Price is looking to go higher. Had a retracement in that 38.20% of the fib. It didn't tap into the order block. But if you look at it right here, and even let's say we go to a higher time frame.
This also with the I was going to ask you quick about the 38.2. Don't you reference breaker blocks? Because that's kind of what I picked up from your videos, that you reference a breaker block, which would be around that like 7:30 mark. That.
Look at that.
Or no, yeah, further.
Right
back.
Here. It would be right here. The last up candle before this. I would use this one. Why would I use that one?
Further back. Yeah, go ahead.
Here, nah, I got you right now. Where is it? I would use that one because let's get rid of all these down here. This is the last up candle before the down move that cleared these lows.
Yeah.
So this is right before it cleared the low. So this is where you got that break in market structure to the downside. So that's why I would use that as a breaker, because now you got that break of structure to the top. So that, what does that mean? A breaker is just a break of structure. It's just like a little term, break of structure. And like you said, the 38.20% tends to be in confluence those areas. And look at that. Even though it's not perfect right here, it's not perfect nonetheless. But say if you go to a different time frame, it might be a little bit cleaner. Maybe if you gone to the 1 minute, it would have been a little bit cleaner, because this is all hypothetical at the end of the day. But you see how it reacts at these specific levels. So even you can see it right here. Look how close this 38.20% level is to this breaker right here. It's not perfect, but think of it like this. It never closed below the breaker though.
Yeah.
It never closed below it. It tapped into the 30.20% and also tried to tap into like this 900 level, because mind you, just a big figure level right here. So it came close, but never really got into it. And then from here, look at where price goes. Starts consolidating, but overall, look where it ended up getting. Now it would have never came back to entry. So at least if you would have broke even once you got up to here, or at least TP2, it never would have came back. So got your full target, and just like that, let's see how price reacts from here. Had a reaction, but then kept going higher. So even though it had a reaction and kept going higher, you still would have got out, because at that point, anything could have happened. As soon as price started losing this momentum, it easily could have been looking for potential pullback even lower, or even to your entry, because say now you pull that fib from that low. Let's get rid of all this. This has already happened. So now that after you got this target, you're like, okay, should I hold this trade or should I just take off myself? Let's pull the fib from this low to where this high is here. Now we're looking at like, okay, if price has a 38.20% rejection again, it might not stop me out, but it's going to come close. But if it comes down to the 62%, it's going to stop me out, because my entry is all the way down here somewhere, and it's going to come stop me out. So that's why you're like, okay, it's better just to take it off at the big figure level. It's already late in the day, and just let price do what it does. And then from here, prices did what it did overall, but it was just, this is a good example of just a trending day. From this 38.20% level, look at how far price went to. Came right to that level that you wanted to. And even though it went higher, it's not about catching the full move. You just want to catch a portion of the move. You don't need to catch the full thing. If you can catch a portion, that's more than enough. More than enough. And then from here, look where it went. Overall trended. So this would have been an example of a bullish London continuation day. So let me take it a step further. Let me see if I was gonna see if there's any high time frame breaker blocks in the area, but it doesn't look like it. And if you also look to the left, look at where this is happening. This whole up move is happening where this is all down candle right here. So it's basically filling all this in, and that's why it's been so trendy. That's why it's just been moving really fast. Not many retracements, because it's trying to fill all of this in. And if you pull this over, this low right here, let's see how price reacts when it gets to that level. From there, that's when price finally had his pullback after filling in majority of this move. All this got filled in. Look at it. All of it got filled in. And as soon as it got to the high of it, that's when it finally had the pullback. The first pullback was after it came to this area. So now you take that, you're like, okay, I can use this and I can study from it. So now I'm going to get rid of all these now. I'm going to move on to the next day. So Monday, Tuesday, Wednesday. This is Thursday that we're going into now. This is when, I think Thursday is when we had that news event. So now, let's see what happens. This is, okay, it already happened. I want to go. Damn, this, something right here. It's like, it starts confusing me. Okay, I'm going to go into it like this. Before this whole move happened. So now you're taking it, okay, what could likely happen? You understand that the previous day's high is right here. Hasn't been targeted yet. You're overall bullish because yesterday was bullish also, but you got to keep in mind where you are on the daily time frame. So let's go to the daily. We got to look at where we are in the daily time frame. Okay, it kind of already happened. It showed you already. But when we had that drop, we were within this daily bullish order block. That's where we were at when we were looking for this drop. So we come back in here, lower time frame. We understand that we're in this daily order block. So even though we are bullish, there's a likelihood that price could potentially have this drop, right? So now you're like, okay, you're putting all these pieces together. So you're like, we're in this daily order block. There's news at 8:30 that could be potentially bullish or bearish. The previous high is not getting broken through. We're slowly moving lower. So what I'm going to do, I'm going to get the Asian session. I do the same thing every single day. I'm looking for the same things. Get the Asian session. Just like this. Let me get it perfect. Just like that. We got the Asian session range. Get the 12 a.m. open. Just like that. So now you're like, okay, what is going to happen? This is the high that was made during London session. So there's a chance that price could potentially have this London continuation. Let's pull the fib. You see how price is reacting there. But let's just wait. Like I said, if the market is going to move in your direction, it'll always give you a re-entry at least. It might move all the way lower, but at some point it might have a retracement that you could just get in. And it's better to always wait for the retracement because now it's at least showing you where it wants to go. You're not just going to hop in at the high expecting it to move, because at that point you're trying to predict the market. And when you try to predict the market, a lot of the time, even if you're right, you could potentially get stopped out. So why would you get stopped out? Because there's liquidity above this high. So if it really wanted to go lower, it could potentially come up, clear the liquidity before dropping. So now we look at what time it is. 7:30. So in about, okay, now we're bullish. We cleared this high. At what time? 8 o'clock. Okay, we're clearing the high at 8 o'clock. We're making the high of the day. We could potentially run for this previous high. We know that. But now we're anticipating what is likely to happen. We're in this daily order block. We're losing momentum after having this false break above this high. There could be a potential bearish reversal happening right now. So now you put that into consideration with a news event. If you're overall bearish, you're expecting price to move lower. You're in this daily order block, so you're expecting there could be a potential movement to the downside. You're above the 12 a.m. open, so if you are looking for sells, you would only be looking for sells above. So above all this, if you're bearish, you're only looking for sells. You're not looking for no buys. You're only looking for sells. So now you take this like, okay, let's take this as a potential short opportunity. I'm expecting that when this market opens at 8:30 with the news, that price is going to have a likelihood of going lower. Where am I going to have my stop loss? Above this previous day's high, just in case. And where am I going to target? I'm ideally going to target the previous day's low, because if price is ideally going to be bearish, it's going to reach for that previous day's low. So now what confirmations do we have? We're making the high of the day during New York session. We cleared the liquidity above the London session. We're starting to reject. We have news in 30 minutes, so the volume is there. We have volume. We're above the 12 a.m. open. So if we're wrong, we're wrong. It's just going to run the other direction. It is what it is. But if it's right, where are we going to target? These lows down here. This Asian session low is also influenced with that. So ideally, the Asian session low. And if you would have taken something off at the Asian session low, that's still a 1.1 to 1.5. So at least here, I personally wouldn't have taken a partial, but I at least would have been break even for sure. I just would have been at least break even. So now let's see how price reacts. We get our first down candle. And what did I tell you guys? If we get one down candle, the likelihood of getting another one is going to be far more likely. We get a down candle. Boom. The 8:30 news happens. So at this point, you at least would have been break even. But now pay attention to where it's going. It's finally leaving this daily order block. So this whole gray box is that daily order block. Now if you want to take a step further, say you take that daily order block and you got the 50% of it. Look at that. Right above that 50%, this is where you got your entry. Came down. Let's see where it targets. Ends up coming to that previous day's low. At that point, you at least would have taken majority of the profits off, or at least move your stop loss to majority in profit. Because at this point, price can either have a reversal or do whatever it's going to do. And then from here, I remember I was actually able to catch this buy trade. You guys remember when I caught this buy trade after the news event?
Yeah.
I was able to catch this buy trade, but that's not the ideal. If the ideal trade would have been this one right here, because this is something that was really nice. But even then here, it's the same thing that happened. You came below this previous day's low, cleared the liquidity, showed a willingness to go higher on the lower time frames, and then from here, look where it happened. Came all the way back above. Sadly, I couldn't catch that full trade. It was sad times, but you got to keep in mind, when you have a bearish day like this, you're not going to anticipate a full reversal like this. You're not going to anticipate a full reversal. Even though this happened, this isn't going to happen all the time, and you can't think this is going to happen all the time. That's why I got out at a 1 to 2, because I knew that there's a potential that this might not fully happen. Now, where did I get out? I got out at the 38.20%. So let's go to the lower time frame. Let's pull the fib from this high to this low. So when I was in this buy trade, where was I looking to get out? I was looking to get out at the 38.20%. Why? Because I saw that there was this bearish order block right here. And I saw that there was a 38.20% level here also. So that's why I was like, okay, I'll take my profit here because I know that, and you're also rejecting here. If you look at this, it was also rejecting. So it's not like I was just like, okay, this is a random spot. It could happen, it could not. It came into it and it actually started rejecting. So what does that tell you? That there's a chance that it could just continue that overall bearish trend. It doesn't mean it's gonna fall, but it doesn't mean it's not gonna fall. And then from there, price overall just started to react, and that's why I decided I'm gonna just take it off here because I'd rather be right and have a winning trade than try to be greedy and hold for the whole trade. Then from here, sad times, and then it ran up even more. But hey, it is what it is. I take it as a learning experience, and now I can be like, okay, when we have big CPI news like this, there's a chance that we can have a full retracement. Doesn't mean that we will, but there's a chance now. Go to higher time frames, and what happened? Came right above that 12 a.m. open. Once again, this is like the third example just in this session of it coming and retesting like the 12 a.m. open. And it didn't just retest that. It retested another big figure level, 15,000, which is one of the levels that I like to use. So now we're seeing multiple examples of them being used. So now came into this, retest back, and damn, all these different things. Goddamn. 15,000 level, I'm going to get rid of this. Matter of fact, I'm not going to get rid of it. I'm looking at this now, but it also retested at 50% of the order block, the daily order block. I didn't even realize that till now, though. But see how many confirmations happen in these specific areas? Look at where the candle closed. The 50% of the order blocks right here. Look at where these candles were closing. Look at how it reacted after that, having that big engulfing after coming into this area at this specific level. And then from there, I think it ended up keeping going lower after that too. And look at that. It kept that overall bearish trend. So even though it had this nice retracement, it kept that bearish trend. Why? Because it came back into this daily order block where the market literally pushed it away from this price action. And even if you missed this full trade, you still could have waited and got potentially back in up here. And even if you didn't get in there, you even could have just waited for it to show you that it wants to go lower. So like I said, the market will always show you it wants to go lower. So once it came lower, you could have just pulled your fib from this high to this low. And then look what happened. Price retraced right back into that fib, right back into this 15-minute bearish order block. And if I'm going to get the 50% of this also. So let's see. I'm going to really see how many confluences it had. Now I'm going to zoom on in. Look at that. Look at that. If you look to the left, resets at the Asian session low. So right here, retest the Asian session low. Get rid of this one. Retrace right into the 50% of the order block. Retrace right into the 70.50% of the fib short. And look at how the candles are reacting. Reacted once, reacted twice. So right here, this is where you ideally would have been wanting to get in. Even though you're not getting in at that fib area, you see that price is having the willingness to react. And when you see price react this precisely, this is when you're like, okay, I think it's going to go lower. So now you wait it. It's showing you stop loss above this high. And where would you be targeting? The previous day's low or this low down here. And now if you look at the risk reward, this is a 1 to 5 trade. So let's see how many candles it takes to get there. 1, 2, 3, 4, 5, 6, 7 candles. 7 candles just happened. And how long would that have been? It would have been about 2 hours. 2 hours for a 1 to 5 trade. So if you risked $100, you could have made 500. If you risked 1,000, you could have made 5,000. But at the end of the day, you're not always going to want to hold to the full target because it never means it's going to get hit. So that's why I like to take some partials at 1 to 2 because look at 1 to 2. When it came to 1 to 2, it started to reject. So there could have been a likelihood where it easily could have reversed on you. That's why I always say take partials. But just pay attention to how price react in these specific areas. So now we're going to move on to Friday's price action.
Do you do partials at every art interval? Like 1 to 3?
It honestly, it depends. I like to take them off at like at least 1 to 2, 1 to 3. Like 1 to 1, I always break even at 1 to 1 because if you think about it, the way I look at it is, if you're willing to risk, say, $100 and take that full loss at $100, why would I not? Why, when I'm in profit $100, would I at least not want to at least make sure I don't lose money at that point. Because why would I be up $100 and then risk the chance of losing it again? So that's why at least at 1-to-1, I break even. If I get stopped at break even, it is what it is. I'd rather have a trade that I get stopped out break even than a trade that I end up potentially taking an L on.
Yep.
So now let's move on to the last day. So now
would you
this,
say bearish long continuation?
what, this one?
Yeah.
This
because
will, I would say, be a bearish New York reversal. Why? Because right up here, the London session highs ended up getting cleared. If these highs never got cleared and this didn't happen, say here, let me take the wicks off. Where is that? Say it would have closed something like this with the wick not going above this high, then it would have been a potential London continuation, because this London high is what ended up being the high of the day. But since we ended up having that wick that cleared it, it made the high of the day happen during the New York session. So that ended up making it happen, that overall bearish New York reversal.
All right, thank you.
Yeah, of course.
Then I also noticed on the lower time frame, we had a shooting star, an evening star, in alignment with the Asian session. So there was a good confirmation right there.
Yeah, there's. I usually, I don't even call them by their names, honestly, but I guess that just happens over time. Over time, you just understand what candles, what they mean just by their wicks. It doesn't really matter the name, but as long as you understand what is likely to happen and you can read what that candle is telling you, then I think you'll be good regardless.
And I noticed you don't use a buy stop or sell stop.
Yeah, I like to just market execution. Because a lot of the times, just me personally, if I have a buy stop or sell stop, remember how that we missed that fair value gap by a few pips?
Yes.
That happens to me a lot. That happens more often than you would think. And trust,
anything just went the other way.
yeah, just a lot of times. So a lot of times you just got to be like, okay, it's not gonna come here, but it's reacting. Because the thing you got to understand is, it's not always gonna be perfect, because the chart I'm looking at is gonna be different from a different chart. So say let's look like this. See how price had this reaction right here. Price came.
So you mean versus your MetaTrader 4 chart?
Yeah, versus that and just overall just trading view. They all have different liquidity fees. So if you pay attention to how, if you look to the left, they all have different prices. So right here, 263, 267, and this one's fucking 173. This is like a whole different number. But the thing is, it's like they're different liquidity fees. So the price isn't always going to be the same. So say right here, price came above 11 pips above this high. I'm going to go to say a different chart now. Let's go right over here. I'm going to look at that same thing. Let's see how high it came above it. Over here, it came above 9 pips. So it's not the same. We'll come over here to this NAS 100 right here. This came above it 16 pips. So it's all a little bit different. And if you also pay attention to the big figure levels, so say right over here, we have 14,800 right at this low. But I guarantee you, if I go to, say, this chart right here, that 14,800 level isn't going to be right there. It is there on that one. Let me see. Let me try this one. Is this, you know what I mean, though? It's like in a slightly different area right here.
And that's why it's key to, like, you got to understand the concepts. I mean, because you can trade it no matter what you're seeing on your MetaTrader 4.
Right here. Look at the 14,800 level.
This is why I like futures, because it's all centralized. Everyone gets the same data feed, and you can see what volume prints at each price level.
Look, yeah, nah, that's a fact. That's a fact. That's fact. So, but look at this 14,800 level. Look at it. See how it was way different. 14,800 is right at this low, and then right over here, it's all the way down here.
Yeah.
So it's like that on multiple different charts. It's not just one. So that's why sometimes price is gonna react before it gets to that big figure level. It's gonna react before it gets to that high. Say it again.
You use Orlando? Which provider do you use for now?
Okay, I use a few of them. I use which one is this? This one I use.
I appreciate this too, bro. Thank you.
Of course. This one I use Global Prime. But at the end of the day, I wouldn't say there's a better one to use, because at the end of the day, whichever one you're using on your actual taking a trade, yeah, that's the one that really matters. So like, say, it just depends on your broker, honestly. So what I would do is find what price your broker's on, and then try to find which one is closest with whatever pair. So you could go through however many, just find the one that's closest, in my opinion. But I use a few, but I have my MetaTrader on the other screen because I have an ultra wide monitor. So even though you guys are seeing my trading view, I have my MetaTrader open also, but on the other half of the screen. So I can still compare both like in real time. So even though it might not be perfect over here, I'm like, okay, we're coming into this area. So I understand the setup I want to see. The price means nothing. I understand the setup I want to see, if that makes sense.
Yep. Yep.
But now that's really it, honestly. This is a nice little session. I like to do this just to overall get a good understanding of what happened for the previous week, because backtesting is one thing, but backtesting only gets you so far, honestly, because it's all hindsight. You got it takes real time seeing it happen for you to really understand it. Backtesting is, like I said, is the same analogy with the car. You're backtesting so you can see it. Now that you see it, you go see it in real time so that you can actually use it and execute on those examples. You're gonna lose some, you're gonna win some, but at the end of the day, that's why even if you lose or win trades, I always do the daily range. So regardless if I had a winning trade that week or that day, I'm going to go in and see what happened. And if I see what happened, I can use that to then benefit me in the previous weeks, in the next month. Because if it happened once, it can happen twice. If it happens twice, it can happen 4 times. Because the market moves with algorithms. And if it's a robot, think of it as this. The robot is programmed to do specific things. That's why you guys see specific things happen over and over and over again. Because the market is meant to do those specific things. And if you can learn what it's doing and learn why it's doing it in these specific areas, you can then reverse engineer it and play with the algorithm now. Because now you know what is likely more to happen. This is more likely to happen than this because we're here and this. And you're putting all these different concepts like the 12 a.m. open, the Asian session range. And mind you, I'm not using no indicators. None of this is just all price. Price is telling you everything you need to know right here. That's really all it is, though. But if you guys want to backtest, I recommend it. But me personally, I like to just backtest the previous day's week just so I can get an overall understanding of what happened. And then I like to overall, here, I'm going to show you guys. I already went over the weekly. Yeah, I already did that already too. But that's really it. Now, there's nothing really much else for me to show you. Now it's just more or less got to get ready for the upcoming week. I'm going to have my markup and everything for the weekly expectation. So I'm going to make that video also after this. But that's really it for the backtesting session. Just a little bit of something just overall, just to keep in tune with the market. So even though if you would have won a trade last week, you still went back and you saw what really happened. And you're like, damn, even if I lost this trade, I see that this would have been more likely to happen. And I should have did this instead of this. If that makes sense.
Yep.
Question. What projection for next week with this war going on? You know, we don't know what's going to happen.
You said, what do I think is going to happen?
They said there's going to be a meeting by the Fed today, Saturday. Emergency meeting, something like that. Do you think it's going to have impact on the market? Maybe there's going to be like a manufactured rally just to, you know, pump money into the market and make it bounce a little bit before going back down because of the war.
Okay, so what I would say is, honestly, I pay no attention to like fundamentals. I pay 0. I don't know shit. I don't know shit. Like honestly, I really don't know, because the thing is, though, even if the news or something comes out bad, it doesn't even mean the market's gonna go down. That's something that really fucked with my head when I started learning fundamentals. I'm like, damn. So even if it's bad news, it doesn't mean it's gonna go down. So it's like, at that point, what's the point of me knowing, right? That's why I like to know when it's gonna happen. So right now, I have on my whiteboard, we have news Wednesday, Thursday, and Friday. So those are the days I'm going to be paying attention, because Wednesday we have news at 8:30. Thursday we have news at 8:30. Friday we have news at 10 o'clock. So what do I know? Even though I don't know whether it's going to be good news or bad news, I know that if I compare my technical analysis with those times, because I know there's going to be volume, I could just go off of that, because the chart is going to tell me everything I need to know. If I like went into wilderness, no Wi-Fi, no nothing, like just Wi-Fi, didn't pay attention, no news, and all I had was a chart, I had nothing, that I knew nothing was going on in the US, I would still be able to get an idea just based off of the chart. Because if I see at 8:30 where there's news and we have a big drop, I'm assuming that something in the world is bad, right? Something is wrong. We had negative news. Something is just, with the way it is, inflation, all the things happening right now. That's why the market has been really bearish. Like if you look at it on the weekly time frame, we're in like this bearish trend for the last little while, and we're overall just trending. Even though we're still trending overall upwards, pay attention to how these are weekly candles. So we had 1, 2, 3 weeks of bearish momentum, and we came all the way here. This is not a small drop. This is about 3,000 points that is dropped in the past like month. And if you look on the monthly time frame, we had a bearish month last month. So even though we are trending upwards, look how low last month it got. We came all the way to these lows. So that's really, but honestly, I don't know what's going to happen. I take it day by day, but that's why I understand just technical analysis. I understand when the news is going to happen, so I can anticipate when price is going to have these reactions. So that's really all it is. But personally, I don't want to say fundamentals are bad. It just all depends on a person, honestly. Just me personally, I don't even like the fundamentals. I don't even be know half that shit mean. Like, honestly. Like, I barely knew what inflation was till like 2 years ago. Honestly, shit. But nah, that's really it. So that's all for today. I'm gonna have another one of these next week, just going over the price action. But if I were you guys, just make sure have these daily ranges, go over your trade from the week, see what you could have potentially did wrong, because now that you see what actually happened, look at it from how you were viewing it and how it's different. So now you can compare the two, be like, damn, I should have been looking at this instead of this. I should have saw that this was happening at this time, and things like that. Because like I showed you on the weekly time frame, the same thing that we were doing on the daily, waiting for it to come above those opens, waiting for it to come to those fibs, using our fibs from the previous day's highs and the previous day's lows, is doing all those same things. And that's why it's just always good to just stay in tune with the market, because regardless, the technicals and the chart is going to tell you everything you need to know. So that's really all I have for today.
One thing I'd add on about like the news is that at the end of the day, the market's always drawing to liquidity or to rebalance an imbalance that it made. So the news really helps add volatility, it disguises. So for instance, that CPI drop, inflation, our prices are all going up. You feel that every time you go to the store. You know it's going to be bearish, but if you look to the left, you see all the liquidity that they engineered. So yeah, price was going up, but they're targeting all the sell stops below the liquidity in that uptrend. So also, if you look at the equilibrium of that price leg at the 50%, you could look for fair value gaps in that area, and you'd see exactly where it's going to. And if you zoom out further, like if you make your chart get more days into your chart, you'll see it did the exact same thing. See, stop. So you see from the 20th to where it says February, it dropped. It made this little consolidation pattern, went up. So that's your first buy stop. If you look at the 50% of that, you'll find a fair value gap, and then it did the same exact thing again. So I may mark that up for you guys, because that's how that helped me see what was going to happen. And I find the market does this. It'll repeat the same stuff like this
over and over.
Yeah, it's crazy. So
every
I saw
day,
that equilibrium fair value gap, and then I saw it was making a smaller version of that up there. So I just looked for where the fair value gap was at around that equilibrium. Then we saw it started making a little buy model, at that equilibrium. And that's when you said you were going long. I'm like, yeah, I'm 100% in on that, because the model is saying it'll go up.
And even then, I was even looking at it the way you were looking at it. It's like you get so much stuff from the information on the data that even though I wasn't even looking at multiple days in the past, I was just looking at what was happening based off of the setup, just based off of the setup. And even though the setup was happening, there's so many other things happening to make that setup go where it's going to go that it doesn't even matter that I don't have every single one. I just have the few that I'm looking for. So right before I end this, the one tip I would give you guys is don't try to understand everything. Don't have a complicated ass system. Find what works for you. Take like 4 concepts and just only use those, practice those, figure out when they're likely to happen, at what times they're likely to happen, and just get better at them. Because at the end of the day, every strategy works. Because think of it, if there's a strategy, at some point it worked in some way, shape, or form. So if it worked one time, it'll happen again. It's not just gonna happen one time and never happen ever again. That's just not how the market works. It's fractal. If it's algorithms, unless it's like a crazy news event or something that's like unexpected, but for the most part, if it's happening, it's gonna happen again. So if you take these concepts, practice it. Because if you notice, I use the same things. I mark up the same charts the same way. I trade it all the same way. I'm looking for 2 setups, and I'm using the previous day's high, the previous day's low, the Asian session, and the 12 a.m. open to overall give me an outline of what I'm expecting to happen. Then I'm using at what time specific highs were made, specific lows were made, and I'm just putting all of it together because I know based off of the data that I have what is more likely to happen. And if this happens, this is going to happen. If this happens, then this is likely to happen. If this happened, then this is likely to happen. You know what I mean? It's like a big puzzle.
I was more effective when I was doing the things you're talking about, keeping it simple. And when I got a little too saucy with it, that's when I missed that drop.
Because you
I
start
added too
start
many
looking
things.
for too many things. You
Yep.
gotta, because the market,
see
you
what
really don't, it doesn't need to be complicated. Simply, if you just would have been, say you understand that you took the fib from this previous week's high to this previous week's low, and you had your fib. If you simply saw that, okay, I'm bearish on the week, I'm a swing trade, I'm gonna wait for it to come into this area, then I'm gonna take my short, I'm gonna have my stop loss above this high. If you would have did that, you would have been good.
Money.
You simply, and that you would have
Cha-ching.
made more than me doing that shit. And it's with simply just using the fib, just understanding, okay, we came above the weekly open. I'm bearish. I'm looking for only sells up here. Where am I gonna look for? Oh, there's big figure low at this fib too. Oh, look at that. So you just simply, you're searching 15,000 fib, stop loss above here, swing trade. Okay, let's see what happens. Where am I gonna target? Ideally down here. This is a 1 to 2. See? Taps you in. Oh, look, it rejected right away. Oh shit. Oh man. And look, comes high. Look, put a little bit of drawdown. Boom, boom. All the news happens. Market ends up coming all the way lower, doing what it gotta do. Target hit.
How
And
many points was that? Out of curiosity.
shit, let's see. On the smallest lot size, on a 0.01, you could have potentially
yeah.
made I'm like blanking or whatever. I'll go right here.
Well, yeah, just 646 points.
It's exactly 650, and it kept going to around 800. So even on the smallest lot size, that's $600, $800. On the small, like, you literally couldn't have made anything less. Physically
Yeah.
couldn't, unless you had like a crazy broker. But it's like just the simplest thing as that. One trade too. One trade. He barely, not
One
that
whole
much
week.
drawdown. One trade for the whole week, and you're good. Was barely in drawdown, and then you can see once price came down, you would have been in. You at least would have been break even at that point. And but look at how price reacted as soon as it came into that area. Reacted a little bit drawdown, tapped into 15,000, but from there it went lower. But that's really all I have for you guys. So hopefully you're able to enjoy this, get a little bit of benefit from it.
Oh yeah, I really appreciate it, man. I'm gonna watch this back and get some better notes.
Of course, yeah. I'll make it's like an hour 12 minutes. So what I'm gonna do is just say, if you guys want the video, just send me your email. Just direct message me on is Dre828 on Telegram. Just send me your email and I can just email it to you guys, because it's gonna be a long ass video. I can't send it to Telegram. That shit wouldn't.
I
yeah.
definitely want the video. I do.
All right, I got you. But yeah, just send me you guys' emails. Direct message me on Telegram. I'm gonna send the email. I'm gonna go to the gym a little bit, so I'm just send it
Oh,
before
yeah.
the day's over. I got you
No,
guys.
yeah, whenever. That's fine.
But I appreciate you all for being here.
Yeah,
Thank you, boss.
man.
I thank you guys. You guys are here because you're trying to learn, so appreciate it.
Yeah.
But
Hey,
nah,
boss, one question. Do you
Uh-huh.
plan to have a WhatsApp group or Discord with time? Or you just want to stick to Telegram?
nah, I'm gonna just stick with Telegram for right now, because I have like the people I like using it. Discord is cool and all, but I don't know. I just like Telegram. It just works for me, because at the end of the day, I don't really focus on it like that much. It's more or less that I enjoy doing it type of thing. So it's just a good place. I could have all my pictures, have all the daily ranges and everything. It's just easy to move. But eventually, maybe I have my own website, so maybe I don't know. In the future, something will always happen. Can't really.
What email for you? What email should we send to you?
No, just send me your email. So that just directs me your email,
Okay.
and I'll send it to you.
Okay.
But I appreciate you guys. You guys have a good day, and
Thank you.
y'all
too,
be
man.
safe.
See
Of
ya.
course.